If you're selling an investment property without knowing about 1031 exchanges, you could be handing over tens of thousands of dollars to the IRS that you didn't need to give them. And the worst part is, most people don't find out about 1031s until it's too late and they can't do anything about it. So, if you're renting a property, meaning you own a rental property, or you have a vacation home that you rent out, or you have a business that you own a property that you use for your business, or you just bought a property as an investment, and you're thinking about selling any of those properties, stop and don't do anything until you watch this whole video, because this video is for you. Missing a deadline in a 1031 exchange, even by one day, means you owe capital gains tax. That is a tax on the profit you made on the property. We've seen investors lose thousands of dollars simply because no one walked them through the process. They didn't understand how it worked before they closed. I'm going to tell you a couple of stories today. Let's start with my client, Diane. Diane was selling a duplex. She had bought it, lived in half the units for 11 years, and depreciated it, which means she got a tax write-off for the property. And she had lived there for 11 years. She had gotten fed up with living next door to tenants and really got fed up with dealing with the duplex. So she decided to sell the property. Now, the benefit to Diane is she could take half the profit and just pocket it and go away, which she went and bought another property. But that's another story. Diane decided to take the other half of the money and reinvest it into another piece of property. She bought another piece of property that worked out for her. Now, when we're going through the process, Diane had a 45-day period to find another house. Now, you know what the real estate market is. You guys are buying it. You're watching this video, so you know you're interested in real estate. So the real estate market is tough. It's hard to find properties and not get outbid. But Diane, on day 40, found her perfect rental property. She put an offer in, it was accepted. Luckily, because if she waited 5 more days, she would have been paying tax and missed that first deadline. So you have 45 days from the day that you sell your first property. We're going to call that the relinquished property, and find a replacement property. We're going to call that the replacement property. So it's relinquished is the property you just sold, and replacement is the property you're replacing with. If you do not identify a replacement property within 45 days of closing on your relinquished property, you owe capital gains tax. If you identify it within 45 days, you may not own capital gains tax. So that's situation number one. Moving on to our next client was George. George had similarly owned an investment property that he rented out. Now, George's property was a vacation home. Doesn't make a difference to the IRS, but it's for a profit is what they're looking for. You're using it to make income. So George rented out his vacation home. Beautiful place. George had decided he wanted to move away from Connecticut and go somewhere warmer. So he decided he was going to sell his vacation home and his primary residence. The primary residence is just a point to he's leaving the state, has nothing to do with the 1031. Selling his investment property, moves down to Florida, and decides to buy another property. George made a couple of mistakes, though. So George followed the timeline, found his property within 45 days. That wasn't the issue. He's chugging along, he's going along, and he knows that he has to close on his property by day 180. But what George didn't realize, because he wasn't really listening, was it's 180 days. The IRS doesn't give you an extension. The 180th day happened to fall on a Sunday. Well, George couldn't close on a Sunday, and he didn't plan for the closing on the Friday, and he ended up losing his deal because he now had to pay taxes because he missed the 180 days. Don't be like George, please. So there's 2 lessons that come out of George and Diane's situations. One is that there's a 45-day period from the date that you sell your property to the date you identify the next property. That one's it's easier. People don't tend to miss that if they plan well. The one that people do miss is they think 180 days is either 6 months, or they think that because it's on a Sunday, we get an extra day. IRS doesn't care. And last time I checked, there's 365 days a year. If you want to divide that in half, that's not 180. There's a difference there. We get a lot of clients that just don't understand the difference. So 180 days is the time you have to close. Now, the last mistake we see a lot of clients make is that what they go to do is they go and decide they're going to sell their investment property, right? Go through the process, they identify everything properly, close on time. But the mistake they make is they sell their investment property and go and buy a primary residence. When you are selling property out of a 1031 exchange, it has to be for an investment purpose or a business purpose. Otherwise, it's disqualified. So because our clients decided to go buy a primary residence instead of an investment property, the IRS said it's disqualified and they had to pay capital gains tax. So there's a couple of rules with 1031s that I want you to know. One is you cannot set it up after we close. It has to be done before we close. I know there's accountants out there because I've dealt with the clients that had those accountants that think that you can do a 1031 exchange or deal with the tax issue after you close. Well, you can't. You also have to buy a more expensive piece of property. So if you're selling a $300,000 house with a $100,000 mortgage, you have to buy a house that's worth $300,001, and you have to take out at least a $100,000 mortgage. You have to have a property that is for investment purposes, whether it's for a rental, a commercial property, whatever it is, you're going to be renting it for a business or investment purposes, so that a way that you can make money on it. There are some strict guidelines. There's a 45-day period to identify or find a property, and then 180 days to close. Now, you don't have to be under contract to sell your first property before you find your next property. So if you're getting ready to sell, you should call and we can do a quick consultation about what your options are and the best way forward. And then finally, just remember every purchase of a property does not work. You could buy a residential property, you could buy a commercial property, you could buy an industrial property. You can't buy a boathouse. That doesn't count, right? It has the word house in it, but it is not actually real estate. You also can't buy a primary residence because that is not an investment purpose, right? You have to have a purpose for investment or a business purpose for that you're using the real estate. So if you're looking to sell a piece of investment or business property, be sure to give me a call so we can discuss options before you even list. Because if you list, you shorten time frames and periods that you might not be able to pull things off on. It is still a very tough market, so we want to make sure you're properly protected and that you can defer your taxes. And I got to repeat that you're going to defer your taxes. You're not going to actually lose them. Uh, def- uh, not have to pay them. Now, if you want to learn more about 1031s or other ways you can avoid paying taxes on selling a home, be sure to watch this video or this video. This one is about 1031 exchanges, and this one's going to be about selling your primary residence and not having to pay capital gains tax on it. And as always, at Connecticut Real Estate Closing Attorneys, we prove the American dream is alive and well, one closing at a time.